Hey, Tom Hegna here. I get a lot of questions. I got a lot of questions right here. I'm going to do several videos on answering questions. This first one is on life insurance. And the first question is, how much life insurance should I have? Well, people have heard in the past you need 10 times your income. That worked when interest rates were 10%. Interest rates aren't 10%. Interest rates are 1%. So, technically, you need to have 100 times your income in today's environment. But I know that sounds a little crazy. So here's just a simple rule of thumb. I say you need at least $1 million of life insurance for every $50,000 of income. And it's very simple because you could get 5% in a single premium immediate annuity guaranteed for the rest of your life. All right. Even young people can get it right, probably around 5%. So $1 million invested at 5% would produce $50,000 of income per year. Okay. That's where I came up with it. Now, people think that's still too much life insurance. Well, it's not. And I'll give you a simple example. This is a true story. I met with a woman. She was 42 years of age. She had 2 little girls. Her husband was killed unexpectedly. They had a $1 million life insurance policy, so she got a $1 million death claim. Well, as I was meeting with her, I gave her my condolences, and after I did that, she said, "Tom, I never thought I'd be a millionaire. Now, here's what I want to do. I want to build a custom house on a lake with a place for my daughters to play. I don't want a cookie cutter house. I want a custom house on a lake, place for my daughters to play." I literally had to stop her mid-sentence, say, "Ma'am, time out. We're not talking any custom houses today. Do you realize you only have $1 million? In a 1% interest rate environment, that's $10,000 a year. I'm here to see how you and your daughters can possibly survive on $10,000 a year. Now, maybe you could get 20,000, 30, 35, 38,000, but every expert I know says you cannot take out 4%. 4% will fail, especially this has to last her for 50 or 60 years. So I said, max, and this is pushing it. You're a $38,000 a year woman. You're not a millionaire, and there's no custom houses that I'm aware of at $38,000 a year. Well, she was shocked. She said, "My husband made $250,000. We can't live on $38,000 a year." Well, ladies and gentlemen, what's the minimum? The minimum somebody making $250,000 a year should have in life insurance, $5 million. We could have a different conversation. So I'm just telling you, tens of millions of Americans are so far underinsured for life insurance, they have no idea. They need more life insurance. All right, the second question I got is one that they said, well, how do you transfer wealth using life insurance? Well, life insurance is the only product in the world you can buy that can create $1 million estate just like that out of thin air. You could buy $1 million of life insurance if you're 20 years old for probably 20, 25 bucks a month, okay? You could die the next month and your beneficiaries would get $1 million, okay? That's how you transfer wealth, and it goes to them tax-free. That's another big thing. A lot of older people say, "I'm going to leave my IRA or my 401k to my kids." That's the worst money to leave to your kids. They won't even see 50 cents on the dollar of that because of the taxes that they're going to have to pay on that. So don't leave them IRAs or 401ks, leave them life insurance. Spend your IRA, spend your 401ks. You saved it for your retirement. Guess what? You're in retirement. Spend it, okay? Leave them life insurance. So those are just a couple questions on life insurance I thought I would handle. I'll throw in one more. People say, "Well, I heard I'm only supposed to buy term life insurance." Dave Ramsey says only buy term life insurance. Well, look, that's just totally ridiculous. I'm not against term insurance. Term is there for a reason. It's there for supplemental coverage, for extra coverage. When the kids are little, when the bills are high, when the paycheck is small, you use term life insurance. But see, less than 2% of term policies are ever enforced on the day that you die. They're actuarially calculated to become too expensive as you get older, so you have to drop it before you die. They will pay if you die early, but you can't use term life insurance for estate planning. You can't use it to leave a legacy to your children. You can't use it for most business insurance. So I'm not against term life insurance, but understand it is for the short term. It's not for your long term. And people do need life insurance when they're older. See, the whole Dave Ramsey thing, it says, oh, you just use term when the kids are young, and then when you're older, you'll be rich. You won't need it anymore. Well, I can prove that one false right away. Who buys the biggest policies? Old rich people do. See, if you didn't need life insurance when you were old and rich, why would old rich people buy the biggest policies? You see, so you do need life insurance for your entire life. And if you really understand it, if you leave life insurance to your kids, you're allowed to spend all of your money in retirement. That's what you're supposed to do. You're supposed to spend every last nickel you got. The last check you ought to write out to go to the undertaker, and that baby ought to bounce. I want you to spend your money. I want you to leave them life insurance. So again, those are just a couple simple questions and answers dealing with life insurance.